Alright guys, welcome back to Stockable Trading. Today's Monday, June 17th. What happened in the past week? Nothing really happened. The market literally been sideways, waiting for the Fed on Wednesday, 2 p.m. Eastern Time. So today, there is nothing to talk about except for two trades I am currently in right now. I want to wait after the FOMC meeting on Wednesday, and I'm leaning bearish. So they are, if you don't know this, in order to have a rate cut, the economy must be doing bad. And if the economy is bad, you don't really see that we are at almost 2,900 on the S&P. The all-time high is 2961. We're at 2898. I think the market is very much priced in the rate cut. So they are pricing in two rate cuts. So we have a meeting on June 19th, and we have another one in July. So, and then one in, or literally one every month, but then we have the percentage of rate cutting. So of one rate cut in June, they priced in about 33%. And for July, they're pricing in about 70% of getting a rate cut. So the market wants two rate cuts. I really think we can only get most likely one, because number one, the economy is not that bad, and second, yes, we have the tariff, the trade wars, but in order for Trump to get reelected, I do believe that he needs to resolve these issues. Otherwise, the consumers are not going to like the higher prices in various products. So that's something that he needs to do, and the Fed is not going to be that stupid to say, okay, let's get two rate cuts, the economy is okay. I don't think that's going to happen. So when the market doesn't see what they want to see, I think we'll have an eventual sell-off. So I call this reversal 2 weeks ago, and we just been sideways so much. So I do still think that we're coming back to 2850 after the FOMC on Wednesday. So I'm expecting Thursday, Friday, and into July of some kind of heavy sell side activity. So now we need to bring this into Amazon. Now we need to find stocks that ran so much, and we need to retrace back 50% and see what the gaps are and try to short this thing down. So look at where we stand. 1896 Amazon. We had a rejection. Doesn't mean that tomorrow we can go over it or break below it. If we stay in this range, something going to happen. Think about it as a rubber band. So much force. You need to have a lot of force to stretch it or stretch it more. So right now we are in the middle of this and building so much momentum that we're going to have some kind of direction very soon. And I do believe that after Fed, we are going to see strong sell side towards the downside. Doesn't mean that I'm bearish. I just don't think we can get two rate cuts, and I think the market wants to see two cuts. So Amazon, I'm looking forward to some 2 to 3 weeks out puts options. So of course we are going to target this downside, this gap right here at 1820. So tomorrow I'm going to have 1-2 weeks out, and then when we break above 1916, I'm gonna cut it if we break above it. So that's what my strategy is for 2 weeks out. And let's talk about Disney, which I have some short position inside Disney. I'm not really that bullish on Disney because we have so many days of sell side in Netflix. So when you realize when Netflix goes down many days, you see a money transfer into Disney because they're going to release their Disney Plus at the end of the summer, and they're opening the new Star Wars theme park in Orlando, and then they have different movies coming out in the next few days too. So we can see so many pumps before that when Disney's pumping up. If this is a true double top, which right now is not confirmed just yet, when you have a double top, we tend to go down, retest the support, and then bounce right back up. So today, for example, we had a retest of the, I believe this is the 5 days EMA, but we formed a indecision candle. So I have 2 weeks out Disney 138 put, I believe. I think Disney is going to retest this gap right here at 137, 138 before we go higher. So this is my outlook is gonna be on Disney. And Disney is overextended, and this double top is not that convincing to me just yet, but I cannot leave this opportunity because I think that money is going to rotate back to Netflix and out of Disney. The next one I want to talk about is the Fomc meeting, which is this Wednesday at 2 p.m. Let's take a look at SPY. Interestingly, for the past 6 days, we barely moved, and we have so many indecision candles. Now, if you look at the weekly chart, so we had a indecision on a weekly, or the hanging man, whatever you want to call it. I think we're waiting for the Fed to have a decision, and in the meantime, I really don't see this going back to all-time high. If you watch some of my videos, I don't really like to short the market, but this time I think that it's time for us to retrace back to 283, 285 range and decide, because the Fed is not going to cut the interest rate when the market is near at its all-time high. It just doesn't make any sense. So, and we have so many political issues going on around the world. You have to look at the bigger picture too. So there's so many things around the world that's unstable. So why do you think that the whole world market and the United States market is going to keep climbing up towards all-time high? I just don't see it. So I think I'm going to get some puts before, some small puts before the FOMC. And once it's decided what their minutes look like, I'm going to get puts all the way to 280. So I'm calling it a reversal starting after Wednesday, and we are going to go down to at least 284 for the rest of the week and next week, and keep on going down. For the market, in order to have rate cuts, the market has to go down. Then the Fed has to make a decision. Right now, it's just all rumors and pricing in the rate cuts. Thank you guys for watching. I'll see you in the next video.